So hopefully we're still gonna have a couple of people join. Just give me 1 minute, guys. Just gonna set up the platform properly and then we can get into the business of tonight. Okay. Okay. So what I'm gonna do tonight is we're just gonna discuss. We're just gonna discuss some live trades. I'm gonna go over some of the things that we've learned, not in details. I'm just gonna talk through it, just to kind of draw a line to link everything that we've learned so far. And like I said, from this point, all I want to see is progress on a weekly basis on how you put flesh on everything that you've learned so far. There are more things to teach, but at this point, I'm going to need you to rise up to the level of the knowledge that I believe you already have before I can get more technical, because at this point, we're still here to cover a couple of topics. These topics that we need to cover are topics that have to do with taking live trades, monitoring trades, and making real-time decisions, advanced analysis. And I cannot take you into these territories until I am sure that you understand what we've been doing so far. So we're going to be doing more of trades. Just look at trades, look at different steps, setups, try to spot setups, timing trade entry. Okay, so tonight I'm going to talk more about support and resistance. I'm going to talk about trends. I'm going to talk about channels, and most importantly, regarding taking trades, I'm going to talk to you about timing your trade entry. Okay, I'm going to talk tonight about timing the entry of your trades, and simultaneously I'll talk about timing the exit of your trades. So if you have been taking trades, this would really help you fine-tune the process. And if you haven't taken any trades yet, still all right. You would increase in knowledge tonight, and then that would help you jumpstart your own journey. Okay. Again, remember, guys, everything we've been learning is all about trades. Okay, everything you've been learning is all about trades. Okay, you want to be a trader. You want to know how to take a trade. I've given you information that has sensitized you and gotten you to a place where you understand certain things about the global financial market. But all of that makes no sense if you don't know how to take a trade, if you don't know how to appropriate all those knowledge and convert them into a sound decision of executing trades in the global financial market. And that's what we're going to be looking at tonight. Yes, I want you to put your trading hat on, and let's do. So what I'm doing is I'll share my screen. Let me see if I've got anything else to show you guys. Okay. Let me share the slides first and just, look through one or two things, and then we'll get cracking tonight. So we've looked through candlestick patterns. We've looked through chart types, like the line charts and bar charts and things like that. But the most informative one are the candlestick charts, okay? And that's why we're sticking to that. So we looked at charts, spotting patterns. Yeah, we'll look more into that tonight. Trends, we looked at that a bit from Saturday. And of course, you want to trade a trend. Okay, you don't want to trade against a trend. That's a very bad idea. And of course, to anticipate reversal. Okay. Yeah, and we talked about support resistance being the highest level or a price point where price cannot go higher. Okay, and price tends to retrace or reverse. Okay, retrace is just a temporary pullback to continue in the direction price was going initially, and a reversal is price turning around completely. Okay, so in any given direction, there's always a retrace and there is always a reversal. Okay, retrace is just a temporary pause. Okay, a temporary pullback, and the market continues in the direction it was going before, and a reversal is a complete turnaround. Okay, support is always at the bottom. Okay, support and resistance are exactly the same thing, and they do exactly the same thing. They are just simply price points. Okay, at which when price gets there, price will either turn around, or if price breaks through it, price goes to find a newer high or a newer low, respective of whatever line it is. If it was a resistance, price is going to go find a newer high if it breaks it. If it's a support, price goes to find a new low if it breaks it. Okay, and of course, a channel is always a tunnel through which price climbs or descends. Okay, so a rising channel or an ascending channel is a channel through which price moves higher. Okay, finding higher highs and higher lows. And a descending channel is a channel through which price goes down, finding lower highs and lower lows. Okay, and it forms a pattern. It forms a pattern like a tunnel. Okay, and that tunnel is called a trend. Okay, so it's either the uptrend or a downtrend. And when it's on a straight line, okay, it's called a range. Okay, so that means price is just bouncing between support and resistance on an horizontal plane. Okay, on a straight line, it's a range. Okay, so let me see if there's anything else worth mentioning. Okay, and then we looked at different candlestick patterns. We look at the single candlestick patterns. They look like an armor, inverted armor, and shooting star. When they show up on a trend, suddenly show up on a trend, it signifies the price is about to either retrace or reverse. Okay, and then we talked about the hammer, hanging man. All of these are in your slides, so please go over them, have a look at them. And from now on, as you begin to look at live chart, I want you to begin to try to spot these things and see what happens after they show up. Okay, see what happens after they show up. Tweezers, exactly the same candles, look like an armor but shorter. The candle wick is shorter than that of the armors. When they show up next to each other, the last one that shows up, or the most recent one that shows up, price is most likely going to reverse in that direction. Okay, so if it was red candle, and then boom, double tweezer, and the new one is a green candle. We're going to wait for 2 more candles to confirm, but most likely than not, price will find a new direction. Triple candlestick patterns, again, morning star, evening star. Yeah, I have covered these in previous sessions, so please go over them again, listen to them. And you've got the slides in the group now, I believe. So download the slides and have a look at them. So, and I put one last slide there today. These are websites that you can start from, okay, to use for your analysis. So Reuters.com and Bloomberg, these are two, if not the most popular, two popular websites. These are go-to websites for traders, okay. Let me see, someone is saying something. The slides aren't changing for me. I think the slide is frozen. Oh, the slide is not changing. Okay, hold on. Let me share it again one more time. Just give me 1 second, guys. Let me do it again. Can you all see my slides now? Changing now? You can see my mouse cursor. Rainbow candlestick. Yeah, that's right. So that's where we are now. So let me try to change it now. Okay. Yeah. Can you see? Can you see the website now? Yeah. Can you all see the website now? I put a new slide that's called the website. Can you see it? No? No? Okay. Hold on. Just give me 1 second. Let me try something else. Okay. What can you guys see now? What can you see now? What can you guys see now? Can you see a slide with websites on it? Can see websites. Okay, great. All right then. Okay, so like I was saying, the two websites at the top, up here, Reuters.com and Bloomberg.com. These two websites are good for getting new headlines and news, and so many other news outlets. When you actually check the source of their news, you would see that it's coming from Reuters or Bloomberg. If you use the IG, if you go under news under different markets, you would see, if you look at the bottom of it, you would see it will show you like where the news is coming from. So you would see that is most likely Reuters or Bloomberg. Okay, so so Reuters and Bloomberg are good for seeing the latest headlines and news regarding different assets and different instruments in the market. Whilst the last two links are good for analysis, and those are the websites that I was showing you on Saturday. Okay, and we're still going to use it tonight, so you're going to get familiar with the websites and how to use them and things like that. Okay, so does anyone have any questions so far? Does anyone have any questions so far? Again, these slides are available in the WhatsApp group, so you should have access to them. So I'm gonna change my screen now to, can everyone see my screen? Okay, share my screen now. Can everyone see my screen? Can everyone see my screen? Everyone can see my screen. Amazing stuff. Okay, so let's do some trading together tonight. And I'm gonna ask you guys questions, and I want you to answer me. Okay, so I want you to type as fast as you can. Just interact with me, and let's do some trading tonight. So let's say let's look at France 40 first, and then we're gonna look at USD JPY, and then we're gonna look at one commodity. So we're gonna use crude oil. Okay, so we're gonna let's use these three instruments here. Crude oil is gonna represent commodity, and we're gonna look at France 40 for indices and USD JPY for forex. And of course, if you have any question regarding any market that you're looking at, please feel free to ask me. What do you mean by your dashboard, Roy? Are you talking about my trading, my workstation? Okay, my workspace. All right, then. So let's start with France 40. Okay, this is a market I trade actively. Yeah. So if you look on my screen, yeah, this is a very, very interesting indices, the France 40. Okay. And it trades almost in the same direction as the German 30. Okay, so look at this chart. You can see my dashboard. Can you see my chart now, Roy? Because I'm not on the dashboard anymore. Okay, cool, great. Okay, so guys, have a look at this. So let's say, for instance, you want to trade France 40. What is the first thing that you would do? what is the first thing that you would do? Okay, so you've opened your app trading platform, either on a computer or on your mobile phone, and you want to trade France 40. Okay, so I'm going to walk you through step by step on how to take a trade. Okay, and when to get into the trade. Okay, so let me say this first of all before we get into details tonight. The most important thing in trading, when it comes to actually executing a trade, okay, you can do your analysis and know that, for instance, France 40 has been on a rally in the last few weeks. Okay, this is actually a monthly chart actually. So in the last few months, okay, so we're having a bird's eye view of France 40 right now. Okay, so look at this on a monthly. Yeah, so this chart goes as far back as 2011. Okay, this pattern formed, let's see when it formed. Okay, so we can say it formed around 2010. Okay, so it formed January 2010, 1st of January actually. So this red candle over here is the first month in 2010. This is January. Okay, so price was at this high. Okay, and it came down to this low. Yeah, and then it took several months to arrive back at this high. Okay, and you see that. Again, remember, for a support line or a resistance line to be valid, price have to have touched that line at least 2 times. Okay, the more price touches the line, the stronger we can consider that line to be. But for a line to be valid, and you don't force price into a line, it has to have happened. Okay, the event has to have happened. The pattern have to form. Sometimes patterns are in formation. Okay, it's just forming. Okay, a time will come when you are really when you're really advanced in your technical charting, you can spot pattern forming even before it's fully formed. Okay, so you can already know that I think this is a pattern that is forming. Okay, but right now, you start by working with patterns that are formed already. Okay, so if I want to know that a support is in a certain place, I want to see price reach that particular place and pull back at least twice. Then I can establish that there is a support or resistance, depending on what direction it is. So support is always at the bottom, resistance is the ceiling, support is the floor. Resistance is the ceiling, support is the floor. I think that's a very good way to remember again. Resistance is always the ceiling, support is the floor. And you want to trade a trend that is trapped between a support and a resistance. Okay, you want to sell at the resistance because price is going to go down. You want to buy at the support because you know price is going to go up. And again, it's never 100%. Price could get to a support and pull back. Price will get to a support and just disregard it and just go past it and just keep going, depending on what is driving the price. Okay, if there is something aggressively driving the price will get to either support or resistance and disregard it and just go past it. Okay, but again, like I said, price doesn't just move in an irregular fashion. Okay, even if price gets to a resistance and just breeze past it, it is going to another resistance. Price always forms a pattern. Okay, always forms a pattern, always is in a pattern. So let's look at this chart again now. This is France 40 now. Okay, so I want to trade France 40. The first thing I do is, you can start in any particular order. You can start by doing the fundamentals, checking, okay, what exactly is happening in the economy of France. Okay, remember, if I want to trade France 40 is an index of France. And what is an index? Okay, it is the collection of the top 40 companies that represents the strength in the economy of France. Okay, France 40, German 30, FTSE 100, the top 100 companies that represents the strength of the economy of the United Kingdom. And then there's FTSE 250, That is number 101 to number 350. Okay, companies that represents, and so for different countries. Okay, but indexes are companies put together that represents the economic strength of a particular nation. Okay, so here France 40, this represents the economy of France. Okay, so you can start in any particular order. Okay, but tonight I want to narrow it down to when you actually open the trade. Okay, the timing of your trade entry. Okay, so you can look at the fundamental, look at what has been happening to the economy of France, and most of the time the chart helps you see. Okay, you don't want I mean, you can't start looking for news of what happened in 2010. There's no need for that. Okay, I can just look at the chart and see what has happened. Okay, so based on this chart, I can see that coming into 2010, 2009 was a good month, even though France has had a very, very bad time from like 2007, sorry. From 2007 to 2009, the economy went really, really down bad, following a very, very good rally. Okay, following a very, very good economic state from like 2004 all the way to 2008. The economy was good. It was just climbing up at almost a steady pace. Okay, reached the plateaued around May 2007, and then this is the 2008 crash. Okay, there was an economic crash in 2008. So France 40 declined very, very strongly. So look at how quick this was between 2007 and 2009. Okay, so this fall happened within 2 years. Okay, this was 2 years of the economy just declining. But notice that the price just didn't drop from 617 to just boom down to let me see. Let me move this out of the way so I can see. Okay, price didn't just move from there to 25. Okay, 2500. What happened was price dropped from this level to this level, and then it retraced. Okay, pulled back a little bit, and then fall back. And remember, I called this correction or pullback. Okay, price plateaued here, so the reversal happened here. Okay, the reversal happened here, and can you remember this? Yeah, this is a hammer. Okay, this is a hammer at the top. Okay, you can see this hammer at the top. So imagine those who were trading this. Let me show you. Trading this. Look at a hammer here. And a hammer showed up, a pullback. And look, at the end of the pullback, there was a bullish hammer here. Okay, there was a bullish hammer here. Boom, price went up. Okay, so you can spot trade. I can show you loads of hammers here. Yeah. So this is an hammer down here. Look, there's even an hammer next to it again. So this is an hammer which confirms that price is going up. This hammer just strengthened this hammer because look, it gave a higher low and higher high. Okay, the height of this hammer is the high of this hammer is higher than the high of this previous one. So remember, higher highs and higher lows signifies price going up. Okay, and then so price was going up. Pull back here, pull back, a stronger pullback, another pullback here, and then boom, reach the top. And on its way down as well, made the first fall, pullback, second fall, pullback, third fall, pullback, and then this time it went all the way down, okay, and came this low, okay. On its way back up again, went up, pullback, went up, pullback, went up, pullback, and then boom. I just want you to get used to these things, okay? There is something called pullback, okay? It is a temporary correction or a temporary reversal, okay? So it's not a full, I don't even want to call it reversal at all. I want to stick to full pullbacks, okay? I want to stick to pullbacks or retraces, whatever you want to call it. A reversal is a complete change in direction. So this is a reversal right here at the top here, okay? This is a reversal at the bottom here. Because the last time price turned around here, ever since that time, price has never been down here again. Yeah, price has just been going up. But notice now, the reason why this was a crash was because it took 2 years for this fall to happen. And it's taken how many years now? And price is still struggling to get to this high. Okay, this high that was seen in 2007, price is almost there now. Okay, so almost like a whisker away, maybe like a month, maybe 1 month away from hitting this high. Okay, and if price gets here, okay, price would only have hit the high of 2007. Okay, so this is almost 2017, 19. This is almost 12 years. Okay, so what took price? This journey of 4, okay, down here took it's a 2 years interval of 4, and it's taking another 12 years, and price has still not reached this previous high. Okay, so this is the power of a crash in the market. Okay, and I was saying to you, I put it, okay, I'm in many groups, okay? I'm in many groups. And I put in one of the groups, I said there's going to be a crash in the stock markets soon, okay? I'm saying it to you guys here as well, so that when it happens, you remember that this guy said it, okay? And one thing with crashes is when it's about to happen, people just don't, people don't know. If people know the market is about to crash, they will prepare for it. People never know that the market is going to crash. I don't know why. But I guess people are creatures of habit, okay? When something is good, you just assume it's going to be good forever, okay? There's going to be a crash very soon. Why do I know that? There's 2 reasons why, okay? The last time price hit this level, this happened. And most of the time, when price begins to rally up to a new high, most of the time what happens is people overprice the value of certain assets in the market. So it will be speculative, okay? The intrinsic value of that thing is not really that good. We all know the economy is bad right now, okay? The economy is bad right now. But look at what's been happening in the last few months. Price has just been rallying. So it's a psychological thing. Because price has crossed a certain price level, people just assume that, oh, the next step should be this price, okay? And because of that, people will hang on to anything that sounds good, even if it's not really good, to just push price up, okay? So because the last time we saw price at this level was a very long time ago, it's taken many years now. Okay? People probably forgot about price being at this level, probably maybe around this level. Okay, it was a far cry, like only God knows when we're gonna ever see that again. But all of a sudden, boom, you just wake up and say, look, we're not far away. We're not far away anymore. And what happens is people begin to speculate a lot, begin to overprice things, overprice events. So an event happens that is, say, a little bit of good news comes down. People are gonna overreact to it. Okay? Obviously, good news means a news that would make people buy into an asset. Okay, and when people buy into an asset, the price goes up. Okay, so at this time now, people will begin to overprice. So people price news in the market. That's just the word. So for example, if something bad happens, people will price that into the market price of whatever asset. Okay, so for instance, let's say crude oil is at certain price right now. And let's say an hurricane happened in the Middle East or an hurricane happened in the US, in Florida. Okay, there was a hurricane that happened and wiped out or incapacitated like 2 major refineries. Okay, price of crude oil will go up because that simply means there will be shortage in production of crude oil and its products. Okay, so price will go up, but the size of that natural disaster will be priced in to say, okay, look, this is the biggest impact it should have on the market. And as soon as people have exhausted the impact, then people begin to look forward to the next news or whatever next is going to move price. Okay. So at that point, they would say, well, the natural disaster has been priced into the market. Okay. So it is possible to overprice something. In other words, you can overreact to a certain news, either good or bad. Okay. When the market is at a high, and people expect the market to go back down. So for instance, now let's look at this trend now. Look, boom, yeah, this trend formed here. My price goes up, goes down. So this is the channel, okay? Everybody can see the channel. Can I just get a response in the chat just to be sure that everyone is still with me? I don't just want to be talking. Everyone is still with me? Okay, good, good. So look at this trend right here, okay? So this is the trend, this main tube at the bottom, and I've got this little tube at the top just to catch the excesses, okay? Sometimes, like I said, resistance and support are price region, okay? So you can see at the bottom here, price tend to stick firmly to the support. But at the top, price is not sticking firmly. Sometimes it just edges up a little bit. Sometimes not all the way. Sometimes it edges up a little bit. Sometimes not all the way. Okay, hence the reason why I have this little tunnel at the top here. Okay, just to say my resistance is between this point and this point. Okay, and the prices are the side here. Okay, so this is a rising channel. Okay, this is a trend in a rising channel, and this is the top of the channel. This is the bottom of the channel. So you can see price has been bouncing, boom, boom, found a new high. So this is a low, high, higher low, higher high, higher low. This low is higher than this low. Okay, price tested this support twice. Okay, hit the support here, pulled back. You assume that it will go all the way up. No, it didn't. Test it the second time. The support held, and then price rallied. Okay, price didn't get all the way to the top here. Made a little bit of retrace. Not a little bit. This is a very strong retrace. It's a couple of months of retrace. Okay, and eventually hits the top of the channel. Okay, so once price hits the top of the channel here, okay, and there is nothing indicating that price should break this resistance and continue to go up, because nothing really cool is really happening. Okay, so price is at the resistance now. The natural reaction is people expect price to go down. Okay, so two things happen here. The guys that bought this rally begins to take their profit. Okay, once they begin to take their profit, begin to close their rally trade, reversal begins to generate. Okay, and of course the sellers will jump on it and push it down. So let's say at this point here, people are beginning to take their profit, but nothing terrible has happened yet to cause price to fall rapidly. Okay, at this point now, everybody's looking for bad news, just because price is at the resistance. Okay, so it is, and of course, when price gets to a resistance, two things must happen. It is either price breaks it and goes find a new high, or price turns back as it should. Okay, at a resistance. Okay, now price is at this resistance now, and say nothing bad or terrible has happened, but psychologically people are just, so any bad thing, any news that comes out that is not completely positive, it may not even be something terribly negative. Okay, as long as it's not completely positive, people will just take it aggressively as a bad news and they just begin to sell. So at that point, the selling could be speculative, meaning there is nothing really concrete that has happened to warrant price to begin to fall at that rapid pace. But psychologically, because price is at a resistance, people just want to sell, or people just expect selling activities to begin to happen. Okay, and at that point, we can then see it is then possible for people to overreact to little, not too good news, if that makes sense. Okay, so I'm saying that to say that, look at now, price has been rallying for 12 years now, like I said, and now we are just a tiny bit of distance away from this high that we last saw in 2007. And event leading up to this moment, so this particular rally in this channel, okay, so this is the plunge, this is a rally, and a plunge, and a rally, and a plunge. This particular final rally has not been because the economy has been good, economy of France, because we all know that global economy suffered because of the trade war between US and China, and it affected all economies. Okay, so this final rally is because this is like the final rally to the high. Okay, this is like the final rally to the high, because there's two things that can happen here. It's either price turns back at this resistance, or it goes to this my second line. If price does what it did here, that means we are at the point where price will turn around, isn't it? Okay, so because at this time around, price didn't go all the way to the top, turned around here. Okay, and then this time around, it went all the way to the top. And then this time around, it didn't go all the way to the top, and it didn't even return back. Tested it at least multiple times. One, tested it twice, tested it 3 times, tested it the 4th time, and then price went back to complete the range, or to complete the channel. Yeah, complete the channel and give you another run again for the top. Okay, so price has now arrived at the top now. Okay, there's 2 things that can happen. If price decides to go for this all the way movement, then we will see this high happen. Price won't even go all the way. Okay, halfway through this top little channel, price will reach this 2007 high, 12 years high. Okay, but if price decides to go down, okay, to the bottom of the channel to give the rally one more run, then of course price will turn around here. I'm thinking people have already done this anyways, so they will probably want to push it all the way here, and I'm all for it. Okay, I just want a little retrace before it happens because I've got some sell trades here. Okay, I've got some sell trades here, expecting that price will pull back a little bit. Okay, like so. Yeah, like so. Pull back a little bit and retest it maybe, and then maybe get to the top, or maybe something bad happens and it goes down. But right now, the last few months of rally has not been because things have been good. It's just been speculative. Yeah, and because speculation is leading to a price that attracted a crash, there is a very high tendency that there's going to be a crash, especially because the economy is bad. The economy is bad. So natural reaction now, as soon as price hits this level, what do you think is going to happen? Everyone that has put in net long trades, so for example, some people bought here, strengthen their position here, strengthen their position. Strengthen their position simply means they bought more. Okay, they bought here, bought more here, bought more here, added more positions here, added more positions here for the final rally. Okay, if price comes down here again before it makes the final run for this stop, okay, people are going to buy more. I will be buying more because obviously, yeah, I'm going to be buying more. Okay, and eventually when price approaches this 12 years ago high, okay, all the people that have made a lot of money or that have a lot of profit hanging that they've been accumulating for the last 12 years, okay, people actually do leave trades to run for that long, by the way, okay, because some people, this is their retirement money, okay, this is their retirement money. So they've been building this money for time. Think about it. It's taken 12 years and they've just been adding positions. So this, after a couple of years, added more position. Yeah, waiting for a retrace, added more position. They're just waiting for a retrace because they know this is a trend. This is an uptrend. The trend has been confirmed. They're just adding more positions, adding more positions, adding more positions. And look how happy they are now. Some people probably have taken their profit here, thinking, you know what, I don't care. If this is the high, this is close enough, I'll lock in my 12 years profit. And so people are thinking, no, I'll wait, I'll wait for price to reach that resistance, then I'll lock in my profit. So think about when price eventually gets here, the amount of profit taking that would happen here alone already will begin to generate a reversal. And the fact that the market has priced in stupid news, yeah, not concrete news, to push price for this last run, that already will trigger an aggressive sale at the top of this, at this resistance. Let me say it that way. And this resistance. And what would happen is if say for example the trade deal event between US and China falls apart around when price reaches this level, because right now the whole world economy is hanging on that trade, and that is just so stupid. The whole world economy cannot hang in the balance for something that we know most likely will not happen. It most likely will not happen because the trade war happened because China are the world leader in producing low consumer goods, okay, low consumer tech goods, okay, and other goods. And US is the market leader for producing high consumer, it means expensive stuff, okay. China produces budget stuff, budget phones, budget appliances, budget electronics, okay, and US produces the high-end ones, from little electronics to machineries to manufacturing machineries to agricultural management and things like that, okay? And what has happened was, in recent times, China has grown in their economy and they now have the manpower and the financial power to create rival. And think about the firepower that China has in technology. They can now create technologies and equipment that are of high price as well. And US is not going to have it. Okay, they want China to maintain their low level and low priced technology market, and then US will maintain its high end. But China now has grown over the year, the economy has grown, and they now have the power, or they have the facility to create rival goods. And that would just topple United Kingdom. That would just take them off where they've been, the place they believe they've cemented themselves over many years. Okay, so the trade war started from there. And because, of course, US is the world superpower, so they're using their strength, their power to impose sanctions. And the reason why the trade war became very, very fierce and became a public spectacle was because normally if US puts a sanction on you, you just respect it. But they slapped sanction on China, and China responded. US put over 300 billion of sanction on goods coming from China, and China responded in kind. Okay, so that caught everyone's eye, like, wow. That is how much China has generated strength over the years. Okay, so now the whole world cannot hang on that. But because nothing is happening anywhere, so now people are just hanging on. If you're a trader and you read news, you would see that most markets in the world are hanging on the faith of that trade deal, which we know. The deal that has been, the argument has been there for years. Presidents have gone. China is happy for the conversation to be unresolved, just be there. They don't mind. Okay, but right now, it needs an answer because US is at a point where everybody's thinking, oh, maybe these guys are not all that powerful anyways. Or the reign of US as the #1 economy is about to come to an end. Okay, so for US, like the final fight. For China is about we are emerging. And for the rest of the world is about, oh, so, well, if China can do it, maybe we can do it too. Okay, so I'm saying it to you for free now, there is going to be a crash. And they've said it, we are at the brink of a recession. It's going to be worse than everyone we've seen in the past, okay? And it makes sense because look at it. It's right in front of you. Unfortunately, people will see it because they are enjoying short-term trades, rally, make money, daily trades. But hey, the people who actually make money, this is where they make money, okay? Load your position, put all your life into it. In 2 years, boom, you're smiling for another 30 years. So, of course, I'm gonna sell this because eventually this will become a range. Look at it. Yeah, look at it, guys. This is gonna be a range. Remember what a range is. Let me get a chorus answer. What is a range? Quickly. What is a range? What is a price range? If you are doing your technicals, what does price range mean? If anyone is still following me. What is a price range? Quickly, guys. Okay, so difference between high and low looks like a mountain, a peak. Okay, so a range is price trapped between a support and a resistance. Okay, simple, that's a range. Okay, price trapped between support and resistance on a straight line. Okay, so for example, we wouldn't call this a range because it's a channel. Okay, it's an ascending channel. But look at this top line here, this high that I've been talking about, and look at this bottom line here. Okay, this is a range. And this is a long-term range because this is a monthly chart, remember? Okay, so this is the bottom of the range. This is the top of the range. Okay, remember I said a resistance or a support is valid when price touches it at least 2 times. Okay, so we can say this is #1 and this is #2. If you like, we can move this line a little bit lower. Okay, yeah. So we can say this is boom, #1, this is #2. So this is established at the bottom. Okay, and when price touched the bottom the first time, this is the high it made. So we can already forecast that the top of the range is this. Okay, we can forecast that when price goes up, price is going to get to this top and it's going to pull back. So we can say at the touching of this resistance, this range is now fully formed. Okay, the bottom one is formed already. This is a super resistance, I know. Okay, this is going to be the support, and in between it will be so many support and resistance in between, but this is the main top of the range. This is the bottom of the range. Okay, so when price touches this top, where do you think price is going? Price is coming all the way down here. And let me tell you something. Price falls faster than it climbs in trading. It's always like that. Look, okay, so this was a very, very good rally. Sometimes price climbs high as well, but most of the time price falls quicker. Look, yeah. So look at the pace at which price fell here. Look at the fall here. Okay. The rally leading up to this, rally leading up to this fall was a very strong one. Okay, so strong rise, strong fall, strong rise. But look, this fall was stronger than this rise. Yeah, but look at how long it's taking price to rise again after this. Okay, look, it's taking 12 years. It's gonna hit here. I can bet you when price touches here, it's gonna take another 2 years to erase the profit that was gathered over 12 years. Okay, bad news is stronger than good news in the market, always. So this is going to repeat itself, and this time I'm telling you it's going to be worse. I don't think this line is going to hold it. I think it's going to go even lower. But at least on the minimum price, look how much fall price has to fall. Let's just take a demo trade. Let's assume, okay, let's assume that we have enough money. We have so much money, we're rich. We're not rich. You've got enough money in your trading account, and you don't mind the remaining space price needs to fill to get to the top. So we want to start selling from here, okay? And then when price eventually reach here, we sell one more, okay? Let's do this together, okay? So let's say we're taking a trade from here. Again, when you want to analyze, you start from big time frames to know where price is going in a long time, okay? Then you use smaller time frames to time your entry. Right now, as far as this is concerned, illustrating what I'm talking about, I just want you to see how much money can be made. I don't care about timing the entry right now. I'm just thinking of the fact that I have money, so I don't need to worry about that. I'm just going to take the trade, okay? So one position of this, of France 40 right now costs £296, okay? So let's say I'm looking to invest money in this, knowing that price is going all the way down here. And this crash is going to be faster than 12 years. It's going to be like maybe like 2 years or less, okay? So I want to invest money. Say I want to pull £1,000. I just want you to see. Yeah, let's pull position equal to about £1,000. Okay, so let's pull 4. Okay, 4 positions gives us just about £1,000. Yeah, and let's see how much money that would generate over the 2 years of crash. Okay, with £1,000, how much am I gonna make? Let's see. Yeah, between a year. Okay, so in my £1,000 investment, I'm gonna make £13,000. Yeah, I'm gonna make £13,000. Okay, now imagine that I am sure of this 4. Okay, and I have a spare £5,000. I'm probably gonna have more. Okay, to invest in this. I'm just telling you for free now. Probably gonna go in heavy, really, really heavy. So let's say I do 5K. Okay, 5K should be about 4 times 5, about 20 positions. Okay, maybe less than that. Let's see. Let's see how much. About £5,000. Okay, 17, yeah, 17 lots. 17 lots thereabout. 17 lots will give me, yeah, close to 60K. Okay, so close to 60K, that's decent. That is decent. And that's on one position. So think about this. Every single time price moves in my direction, my account increases so I can place more positions. So imagine I had more positions. So in this rally, 1, the initial position, 2, 3, 4, 5, 6, 7. Okay, so there were 7 different opportunities to add more positions. Okay, so let's say I took only 5 of them on the way down, strengthen my position 5 times. For example, I'm talking about I took my position here the first time, added more position here, added another position here, added another position here. Let's say I only added that 3, 1, 2, 3. Okay, and don't forget that once price pulls down, I've already made some money. Okay, so I can increase my position. So let's say I'm only increasing position by £2,000. Okay, I put another £2,000 here, and then between here and here, I've generated a lot of money, so I can add easily another £2,000 and another £2,000. Add £6,000 more of position. At least it's going to give me at least about 60% of this. Okay, so you're looking about 70 to 80 grand. Okay, in these 2 years. That's decent money, isn't it? Okay, and imagine if I had £20,000 to invest. Okay, And I'm going to be putting a lot of money in here. I don't want to mention figures, but I'm going to be putting a lot of money in here. So that at the end of these 2 years, and this is just one market, yeah, this particular crash is going to affect so many markets, okay? And I tell you, German 30 moves exactly the same way as this, and this is going to be a global crash, okay? This is the stock market, okay? So I'm just going to spread my money in different markets, and they're going to crash by the same volume. I can prove this to you. If I go to German 30 now, if I open German 30, so indices, I know I said I wanted to take some trades, but I want to show you this. So monthly, yeah. So look, this is the same crash there. This is between, it's blocking my view now. Yeah, this is 2008 crash. Can you see it? Yeah. Obviously, every market is the chart is different. Okay, they're spaced apart in different ways. Okay, so this was the and Germany, their economy depends more on automobile. Okay, but everybody experienced the crash. So of course, if I'm trading German 30, I'm going to be trading it based on the support and resistance that exists in German 30 chart. But look, the decline happened in every single market. I can show you market after market after market. The 2008 crash, it was a worldwide crash. Okay, and I'm forecasting that it's going to happen again very, very soon. And we're at the brink of it. We're not far away from it. Okay, and then of course this pattern is just close to fully forming, and this is going to happen. So yeah, so if you want to take a trade, yeah, you look at the big time frames to look at long-term direction of a market, and then you narrow it down to smaller time frames. Okay. Now, if you timing the entry of a trade is very, very important. For instance, if I was going to sell this market now, yeah, I can say price has reached the resistance, but look, it's still got a little bit of time to go. So I can either take the risk and sell from here, or I can wait a little bit, okay, to see what happens because I'm looking to take a long-term trade. But if you're someone who just wants to take trades on a daily, okay, you just want to take daily trades, you don't care about long-term, you just want to make money on a daily basis, and at the end of today, this is how much I've made, okay? You will not be taking trade based on looking at this fall, okay? It's just that every time you're selling, you're more confident because you know that's the overall direction or the long-term direction. So you're confident to sell than to buy. Okay? Whereas when price was down here, okay, and price is the support is strong, and price is about to recover. The journey here, okay, these are multiple months. Within the next few months, I will confidently take buy trades over sell trades.
Where's this coming from?
I think someone. Someone
Is it my phone? Do you want to do?
Yep. Okay, done. I've done it now. So, yeah. So if the trend is upwards, I will be confident in taking buy trades as opposed to taking sell trades, because if I'm selling, I'm trading against the trend, and of course, when price moves against the trend, most of the time is a retrace. Okay, for price to continue going up, and you don't know how long the retrace is going to be. You can find out, you can have an idea by using some tools, which I'll be showing you in subsequent classes, but you want to trade in direction of the trend. Okay, so to know when exactly I want to get into this sell, okay, if I was going to trade this temporary sell, yeah, then I will narrow it down into smaller time frames. So I'll look at the weekly, okay, so you can see that single candle that you saw that was just about to touch the top right now is broken down into these 4 candles, okay. So this is the month, okay, from Monday the 4th of November to Monday the 11th, Monday the 18th, Monday the 25th, okay? So then that last monthly candle that you saw at these 4 weekly candles, and you can see that price is about to start turning around. However, like I said, it could make a run for the top of this channel, which is still a good distance to go. If I was to take one position here, I would still be making, let me see, at the top, I'll still be making, second, that anticipate price to hit the top at this level, we're still going to be making close to £400, okay? Which probably may happen in like 1 week or 2 weeks. But so let's assume that price is going to turn around here, and I just want to know exactly when to take my trade. Again, like I said, you don't just take trades because you know price is about to turn around. You want to time your entry to when price will actually start moving back, because you don't want to see minus. You want to start seeing your trade in the blue as early as possible. Okay? So I'm going to narrow it down now to daily as well. Yeah? And don't forget, at this point, I've done my fundamentals, okay? I've looked at trends, I've looked at the news, I've looked at the economy of France, I've looked at the economic reports, economic calendar, I've looked at the state of the economy, I've looked at the different companies, how they're doing, and I can see that nothing really is good, indicating that price is going to break this level, so price is going to return. So I just want to know when exactly to get in, okay? So looking on the daily chart, I can see price is forming a double top. There's something what we call a double top, okay? Yeah, boom, yeah, and price made a run for it one more time, okay? And price is still stalling around the same level. The line is around here. Again, support resistance is not a line, it's just a price region, okay? So we can see price is already hushing, okay? It's already slamming on the brakes, okay? People are already wondering, should we just lock in the profit and call this a day, okay, for this rally? Or should we wait to see what's going to happen? Some people will wait, some people will start taking profit, okay? But this will, in the next couple of days, people will know what they're going to do, because we're going to know. But look, I'm not going to jump in just yet, because there is still a little bit of space. Imagine I start selling from here. Imagine I sold 2 positions from here, and price decides to go and, complete this little space. Let me see how much loss I will be in before price turns around. So let's say I just know, okay, price is going to fall from here, because price is at the top and it's about to go back to the top bottom of the range, and I want to sell. Imagine I just, based on that, I made a trading decision and I sell. Look how much minus I will be in if price decides to go on. 131 pounds. Okay. And that may cause some people to freak out, and they'll just close the trade. And as soon as you close it, then price will begin to return back, and it will go all the way to where it's supposed to go. Okay. So you don't want to jump in too early. And price may not even return. Price may just break it and keep going up. Anything can happen in trading, and you will have stitched yourself up. Okay. So you want to time your entry as good as possible. Okay. So just give me a second. All right. So I would then narrow the daily down to 4 hours chart. Have a look. Look, that little double top that we saw. This is it. Okay. Again, the top that we're looking at is around here. So it's still high, still really high. Yeah. But let's say I just want to trade on a temporary basis, on a daily basis. Okay. What pattern is this forming on a daily basis? Yeah. On a daily. Yeah. I can see this. Let me show you. Yeah. On a daily, I can see this. Yeah. On a daily, I can see this. Look at that. Yeah. On daily, I can see this. And if I change this into 4 hours, it then becomes bigger. Okay. Look, on the 4 hours. Yeah. So on the 4 hours now, we are at the bottom of this channel. Okay. So price should be rising up to like the top here. Okay. So within the next 2 or 3 days, I want to be buying. Okay. Within the next 2 or 3 days, I want to be buying the France 40. Yeah. Okay. And within the next 2 or 3 days, I want to be buying. But is it time to make this, to put in the position now? No. Why? Price is still got a little bit of distance to cover. Look. Okay. So we can either say, oh, price has touched the bottom here, so it's going to go all the way up. But I wouldn't commit to that yet, because remember I said price has made a double top. Okay, so there's lots of excitation around here. Yeah, there's lots of excitation around here. People are hesitating. They don't really know what they want to do. Yeah, around there. So what I'm going to do is I'm going to wait for price to touch this bottom. Yeah, 2 things. I can either buy from here, okay, because I know price is going to pull up to this area again to come and see what's going to happen. Between here and here, at least I will be in profit. So if price turns around, yeah, I can be sure that price will be doing higher low, higher low. Yeah, my own low here is a higher low, and the new low here is going to be a higher low. So I'll still be in a little bit of profit to be able to wait it out. And if price should break it and go to the top, good for me. If it doesn't, I can easily cut the trade before I come back to zero. Okay. And if price goes up and break it, then boom, it's going to go up. A very, very cautious trader would not take that trade. He would wait for price to touch a bounce and break this line. Once price breaks into this line, then I know price has cleared the doubt here. Then I'll buy from there, okay? And I'll ride the wave all the way to the top, okay? That is how to time an entry to the trade. So, but don't forget that if I was to go back to monthlies now, there's been different decisions, yeah? So on a monthly, it's a seller's market right now, okay? On a weekly, it's still a seller's market, yeah? In this big channel. On a daily, yeah? On a daily, is a buyer's market. And you see that on a daily is a buyer's market. And if we turn to our 4 hours, yeah, the sellers is a seller's market. Okay, so it looks like price is coming back to contest this. How do I know that? Look at this. These 3 candles, this one candle is big enough to swallow all of these guys up. Yeah, so it's reversed this little rally area. Yeah, so we can say price may want to come back to test this bottom line before it eventually starts going up. Okay, so you can see in different time frames, it could be different markets for different people. Okay, and on the hourly, it's still a seller's market. Okay, there's a little bit to sell here. And the different strategies of trading, some people, yeah, instead of, some people want a long distance trade. Okay, when I say long distance, they want to trade between here and the resistance here, okay, and make their money. And some people say, I don't have time. Okay, I only go a couple of hours. So there may be a couple of hours between here and this bottom, and I want to trade it. So what I'll do is I'll put in a lot of money here. Okay, I'll put in £1,000. Yeah, I'll put in £1,000 or £2,000. Yeah, depending on what you're working with. Yeah, and I'll make my own money. Yeah, I'll make my own money here. I'll put in £2,000 and I'll just make that in that trade, and I could make that in 1 hour. How do I know that? Look at this 1 hour candle. Look how big it is. Yeah, look how big it is. If this candle should put here, boom, in 1 hour, boom, the money's in. Or someone else can say, oh no, but I want to trade this. So if I reduce this to one position, yeah, and go all the way here. Yeah, see, it's around the same thing, £131. So it depends on, so these are different strategies for different people depending on the kind of trader you want to be. If you're a daily trader, how you would look at the market will be different from someone who doesn't mind trading over a long time. So that is how to time your trade entry. You want to use bigger time frames to see where the market is going over a long time so that you can know which trend is dominant, okay? Leading up to this moment right now, the buyers have been dominant, but the sellers are about to take over, okay, and sell this whole space, okay? So in a long time now, it's going to be a seller's market. However, the buyers can still push a little bit more. They still got a little bit of space to push to get to the ultimate resistance, which would align with the 2007 high, and then the sellers will become stronger at that point. But right now, the sellers will already start taking their positions. Okay? That's what the weekly is saying. So how do I time my entry into this seller's market? It is not time to sell yet, even though it's going to be a seller's market over a long time. So I'm going to look at the daily and see that, okay, the journey to the top, there's still be a little bit of space. And in that little channel that has been traded since Thursday last week, no, since Thursday, it's Thursday, 3rd of October. Okay, this channel has been information. Okay, and price has been climbing steady. Okay, and based on this channel is a buyer's market. Okay, so that is how to make informed decision. Because imagine you sell here, looking at weekly chart, expecting price to drop drastically, and you make a lot of money, and price will just continue to go up, and you thinking, oh, why? I think price is supposed to go down. Yeah. You understood the long-term direction of this market, but you mistimed the entry of it. Okay, so you will lose money. Okay, and especially if you don't have a lot of money. Let me see. What is what 20 years? What is that 20 you are typing? Oh, it's the size of the trade. Okay, it's the size of the trade. So to take the trade, you can either buy or sell. If you click on buy, it will ask you the size you want to buy. Okay. The minimum, it will show you the minimum you can buy or sell. Okay, 0.5 is the minimum. And if you want to enter 0.5, it will show you at the bottom here how much it's going to cost you. Okay, £148. Yeah, if you put in one position, it costs you £296. So depending on how much money you have, you would choose how much position you want to. And when you're filling your trades, don't fill in all these stops and stuff because you get confused. Yeah. When you're taking your demo trades, don't fill in stops and limits and things like that. Don't do it. It's the same thing as what I'm doing by dragging this line up here. Okay. When you decide to buy a stock, it's going to put a line on the chart where your buying is going to start from. Well, if you're selling, it's going to be red. Okay. And you will see stop and limit on this box here. Yeah, it's the same thing as this stop and limit here. Okay. In here, you're just imputing a particular price point. Okay. But here, it's easier. This is 2019, guys. You can just drag and drop. So you can drag it. So if you're looking to move all the way from here, use 2064 as your stop, just drag it here. I mean, there's a box right here that shows you how much, So you're saying that I don't want to lose. I don't want to lose more than this. That's what stop means. Okay. In this trade, I don't want to lose more than £50. Okay. And if the trade moves my way, my profit is, let's say you want price to get to 56, okay? My profit is £334. So once you do this, what it means is when price moves in your way, once price gets to this level, this particular price point, the platform locks in the trade for you, closes the trade and takes your profit for you. So even if you were not monitoring, if you were doing something else, the trade will close and your profit will be in. And if the price moves against you, as soon as price hits this line, the trade will close and then you will have limited your loss to £51.40. Okay. And you can see risk reward ratio, okay, is the ratio of your risk, your loss to your profit. Okay. And it's 1 to 6. Okay. So you don't mind losing 1 to gain 6. That's a decent risk reward. Again, I'm going to be telling you about risk reward ratio, but for now, don't worry about it. Just take trades. Like I said, take the minimum position you can. Okay. In this instant now is 0.5, so do 0.5. Okay. Maybe 1. Okay. But don't do more than 1. Okay. 0.5 or 1. And just take trades. So the summary of tonight is timing your trade entry. Okay. You use bigger time frame to look at where market is going over a long period of time, and then to know exactly when to execute your trade, you narrow it down with smaller time frames and you put in your support and resistance based on patterns that you can see. Men looking at this, I put this one right in front of you guys because my eyes has just been trained to see it. Okay. All you want to see is a channel. You want to see a pattern of price forming a trend, either to the upside or to the downside. Can you please explain what? What do you want me to explain, right? Okay. For example, if I open another market, say crude oil now, and I look, this is daily chart. If I want to see what price is doing on a smaller time frame, say I want to take just a small time frame trade, let's say a 15 minutes, okay? On a 15 minutes, or let's say hourly. Let me look at what price has been doing over the hour, okay? Over the hour, I can see that price is in a range, okay? It's in a straight line range. This is the bottom of the range, and this is the top of the range right here. Okay, you will see that, yeah? And this range started forming around Thursday, yeah? Started forming around Thursday last week. Okay, of course, this is Monday this week. Okay, but price has been trapped between this resistance and this support. Okay, price has touched this 1, 2, so already this resistance already established, and then price came close to it the third time and pulled back. Okay, this particular support price has only touched it once. Okay, I won't consider this touched it once. The second time didn't get all the way down there, so I can assume that this is a pullback. Price is going to come back down to come and touch it. Okay, remember, price will not just go from top to bottom, boom. Most of the time, there's always pullbacks. Okay, so I'll assume that this is a pullback for price to come and touch it. Okay, so this range, price will then be in this range. And logically, in the crude oil world now, it makes sense. Okay, there is nothing good to make price crude oil more expensive. There is nothing terribly bad yet to make it extremely cheap. Okay, so price is just within a range. Okay, so it's either this range breaks to the upside or breaks to the downside. There is an event, there is a meeting that OPEC is going to have on the 5th of December, I believe, and they will decide certain things that move price in the crude oil market. So I believe that's why price has been in this consolidation now, waiting for December 5 to happen to decide the next direction the price is going to go. So right now, price in the range. So what do I want to do in this market now? I want to, okay, this range, this top of the range, bottom, top, bottom. This is a pullback, so I want to be selling. Okay, I want to be selling is remaining decent. And on Tuesdays and Wednesdays, the inventory reports of crude oil comes in. If there is too much build in the crude stock, price will fall. If we've used a lot in the stock, price will rise. And the report that came out this afternoon, 3:30, says there's a build in crude oil. So that means price will be negative over the next few days. Okay, and except something good comes from the trade war between US and China. At the moment, it's still the same thing. Trump is saying, yeah, trade is progressing, but that's what they've been saying since it started. So we can all assume that nothing really is happening until they put pen to the paper. So in the near time, I can sell over an hour. Yeah, so I can do this. I can sell one position. Yeah, expecting price to come down to the bottom of this range. So if I put in this trade now, boom. Yeah. Remember, £2.80 is the spread. This is what IG makes from this trade. Okay, and they've made it already. So now I can set my limit now. Okay, and based on the fact that I believe that price is going to come to this line, I'm not going to put a bang on the line. I'm going to put a bit before the line. Okay, but sometimes price may not touch it completely. Yeah. So as I've sold this one position now, I'm going to make about £70 profit. Okay, and I can set my stop as well. I can say, look, I don't want to lose more than £10 in this trade. Okay, so I'm willing to lose £10 to gain £70. Yeah, that's a typical trade. Okay, and all I'll do is I'll monitor this trade. And if I feel that, look, price may be volatile, price may actually cross my £10 mark and eventually go to my position. So I would say, you know what, I'm not going to stay stop. I'm going to monitor it myself. Okay, for you, don't do that. Okay, set stop for every single trade. But for me, I would set my limit. So take profit from here. But as far as my loss is concerned, I'll monitor it manually. Okay, and I can do that. And how do I decide? Okay, so when do you give up on it if price keeps moving against you? I can give up on it looking at something like this. Let me show you. Again, everything is not just done randomly. Okay, there's a reason for everything you do if you're a good trader. Okay, so I can put a trend line here saying, can you see this? Yeah. Can you see this? So in the short term, I can see that price has been kind of forming this sloping roof. So I can say to myself, until price touches this line and breaks to the top side, I'm going to accommodate any loss that happens here. Yeah, as just a fluctuation, but I'm expecting price to eventually come down here. Okay, and if I look at this on a 15 minutes window, you can actually see it. Okay, so even though I sold from here, I'm anticipating that price may still want to come and test this sloping roof line that is forming. Touched one, touched 2 times. Price may want to come and touch the 3rd time before going down, or price can just fall from here anyways. Okay, so how do I control my loss even though I don't want to preset it? I can just put this line in and say, you know what, if price rises above it, I'm going to accept the loss and I'm going to cut the trade. If not, I'm going to lock in my profit. Can you explain when the limit is set low, how you get profit? But the software does it by itself. Okay, IG does it by itself. So once I've set the limit here, limit simply means take profit. Okay, loss, stop means stop my loss. Okay, if I'm losing, stop my loss at this point. If the market is moving in my favor, I limit my profit to this point. Okay, that's what stop and limit means. And once you set your limit and you set your stop, for instance, say I set my stop here. Okay, I've set it now. What IG will do is as soon as price crosses this line, IG will just close the trade. Okay, and you would take £23.70 loss. Okay, which will come out of your funds. And if price moves in your direction and gets here, as soon as price crosses your limit line, which is a price point, at this point, my limit is set at 5735.8. So if I was to do it manually, if I don't want to put this line, 5735.8. So say I close this now, I can put here 5735.8. Yeah. If I set this, if I set this when I was taking my trade, automatically my limit line will appear here. So that is that for tonight. Of course, when we're doing trades, when we're looking over trades and stuff like this, there will be so much to talk about, because I'm not going over slides with you. I'm actually showing you this is actually what trading is all about. So this is where I expect you to be asking all your questions. Yeah, so we'll look at this trade. Let me remove the stop loss now. I don't want it to be there. Okay. So we'll look at what has happened to this trade on Saturday. Okay. We'll look at what's happened to this trade when we'll come back on Saturday. So let's leave this trade here. And of course, did we take the France 40 trade? The long-term one? No, we didn't. So let's just leave that one for now. Yeah, so we'll monitor the crude oil. And this particular long weekly trade I was talking about, this one right here, yeah, I can set the trade. So let's set £500 worth of trade for this one, which is 2 positions. Okay, let's say price comes to around 50. Okay, it's about £1,800. Yeah, so let's leave this trade and monitor it. Of course, anticipate that price may move high a little bit just to complete this range. Yeah. Another thing that is possible is you can buy and sell at the same time. But I don't want you to think about that for now. Okay. But you can buy and sell at the same time. So I can say, look, this is my long-term trade. If I decide to go this high, I want to take that profit as well. So I can buy at the same time. Okay, you can see I've paid £4 each for the trade. Okay, and if price decides to go up, what would happen is if price decides to come this level, yeah, my trade will be minus £437 and then plus £437. So if I lock in this profit, yeah, I'm still on zero, yeah, and then I can put another sale up there. So when price goes down, I've actually made £437 extra. Again, I will explain that to you how that works. I see that you said limit to you're expecting profit to, yeah, of course. That's exactly what it is, right? Can you show the monthly one for France? I start by showing it. Yeah, this is the monthly for France. Yeah, so we'll probably have maybe one more month. If price is gonna go for it at this run, if not, this can happen first. Okay, price can pull all the way back down here first and make a run for it. In other words, our trade may run first. Oh, I've actually placed these 2 trades now. So let's see how it goes. I've actually placed the buy and sell at the same time now. So we'll see how it goes. I didn't want to show you this now, but hey, I've done it already. So we'll see how it goes. But yeah, so is either price goes to this stop, okay, and then price then begins to fall from there. I'm predicting it will. Or price does, does one more run in this rally, rally channel. Okay, it comes down, touch the bottom, and then make another run for the top. If that happens on the run to the top, definitely price will go to that 2007 high. But if it does it this time, yeah, we may see one more month. Okay, to reach there. It's a couple of weeks, and it could be 1 week depending on how whatever is propelling price. Right now, like, people are speculating, so any good news is good for the market right now. And then the sell-off will happen when we get to this price level, which is about 61.80 thereabout. Okay, and then we'll see the long sell. I will be selling that. I want to assume that you guys are going to do as well. So yeah, that's it. Yeah, so that's that, guys. So take more trades, please, guys. I believe you know how to execute a trade now. It's very, very simple. Look at a market, do your analysis, check look at those websites that I've shown you. For example, look at, for example, if you wanted to check crude oil, look at what crude oil is saying, go to technicals, yeah? And it will show you, if you want to sell it, over 1 minute, it's saying a strong buy. Over 5 minutes, strong buy. 15 minutes, buy. 30 minutes, neutral, okay? They're telling you, we don't know what direction is going to go over 30 minutes time frame. Over hourly, strong sell. Over 5 hours, buy. Daily, strong buy. Weekly, strong buy. Okay, monthly, neutral. We don't know where it's going to go over the next 1 month. So yeah, so this is how. So this will help you. You can look at it. If you're looking to trade hourly, you can look at it and say, look, hourly is saying strong sell, so I'm just going to sell it. Yeah. So look at what this is analysis for you. This is technical analysis for you. Yeah. So do your own support and resistance. Come and use this one to confirm, okay, if it aligns with what you're thinking. And sometimes you need to trust your guts. And sometimes you may decide to say, you know, I'm just going to trust these guys. Yeah. But you must know what to do to be able to have an opinion. Don't just rely on opinion or people's opinion blindly. Yeah. So do this, have a look at these websites, and you can look at different markets, Forex, you can look at different currency pairs to see what they're saying, commodity indices, blah, blah, blah. and take trades, okay? And monitor your trade. Decide where you think the trade should get to. Monitor it. Lock in your profit. Okay, so if your trading account started at, I believe everybody's trading account should start from £10,000. I want to see how much money you can make or how much money you can lose. Obviously, I don't want to see you losing money. I want to see you make money. So if all of you started at, if I know you started at £10,000, isn't it? Okay, so on Friday, on Friday, I want to see everybody's screenshot of your balance. Okay, screenshot of your balance on Saturday. Okay, any trade you've taken up until now is exclusive. You've taken ridiculously big positions. From now, take the minimum positions possible. And on Friday, everybody screenshot your balance, okay, and send it into the group. That's how I'm going to monitor your progress, okay? I want to see your trades. I want to see you explain why you took your trade. So you put a screenshot. So when you're taking trade, once you open your trade, take a screenshot. So we're seeing where you're starting from, okay? And tell us where you expect it to go. Just like the pictures that I show, I'll put like an arrow, okay? On your phone, you can just put like an arrow, like, oh, I'm taking the trade here. I'm expecting the trade to go this way, okay? Put like an arrow there. And say in another 4 hours or 10 hours or whatever, when you close the trade, put another screenshot and say, okay, this was the trade. It eventually made the distance. That's it. And then put in your account balance on Friday. So we'll check everybody's account balance every Friday, okay, and see how far you've done for the week. So we're gonna leave it there for now, guys. If you have any question, again, ask away in the group. Ivana is doing really, really well, I must tell you. Maybe because, and I don't help. I don't give her any extra help than what I say to you guys. So she sits down here, listens to the lecture, and does whatever she hears, okay? But she's doing well. She's really passionate about it, and I'm so proud of her. And I'm so proud of all of you guys that are doing it. Some of you are probably been busy, but again, this is the essence of all of this. If you don't take trades, you cannot know that you know anything. Theory doesn't work in trading, okay? It's all about knowing how to take trades and close it, to make profit and minimize your loss. So I'm going to leave you there for now, guys, and then I will see you guys on Saturday, okay? Take as many trades as possible, make as many mistakes as possible, and we'll correct them together. So yeah, so take care. Have a nice evening, guys, and I'll see you guys on Saturday. Yeah. Adios, amigos. Okay, let me see. Someone just sent me a message. Great. Okay, amazing stuff. See you guys.